Welcome to Make Your Money Matter. I'm your host, Brad Barrett. I'm also managing director and partner here at One Capital Management. And today on the show, we're going to go and dovetail off of our last show around value investing and talk about dividend stocks. Now, obviously, one of the main components I brought up on our last show, and you can look that show up here on our channel, but when it comes to dividends, we want to focus on what they are and why they matter to your portfolio. But before we get started, make sure to check out my new online course, How to Pay Off Your Debt. The link is in the description box below. Look, if you're sinking in credit card debt, this course could be the answer you've been looking for. Now, smash that subscribe button. Let's hit that notification bell so you don't miss a single episode. All right, let's get into it. So again, today we're going to talk about dividends, and dividend paying companies are, I think, a wise addition to any portfolio. Now, obviously, you want to seek counsel here, make sure it fits within your strategy and your scenario and your risk tolerance. But I want to answer the question here on the show today of what are dividends and what are dividend stocks in particular, and explain how to find some of the best ones out there. Now, not specifically the investments themselves, but what to look for at the end of the day when it comes to these investments. We all, as investors, have many choices around how to create income in our portfolios. And again, the thing that I want to lead off here today around dividends is one of the best ways to do it is through dividends, because from companies that increase their payouts over time, it matters. Okay, but what are dividends, Brad? So in general terms, we're going to talk about a dividend in terms of how they work. So companies that offer a dividend value, companies are legally able to pay out a portion of either their income or their retained earnings. That's what we know as a dividend. These payments are called dividends. Now, there's also something called preferred stock, which sets the actual dollar amount to be paid out each period based on the par value of that security. A little bit different. But for those of us who just invest in normal companies and normal stock, there's also common stock or ordinary shares out there as well. Now in the US, right, public companies tend to pay out a portion of the earnings that are level or consistent each quarter. Then each year, obviously the board of directors and people managing the company will often increase the payout, usually on an incremental basis. One advantage of keeping dividends level and growing over time for these companies, let's speak from the company side for a second, is that it can help stabilize their overall stock price, which we also like as investors. So as we get to know a high level of what a dividend is, the next question I think would naturally come is, okay, are dividend stocks a good buy or something good to add to your portfolio? Now, for the most part, I'll share this. Investing in dividend stocks, as I shared at the top of the show, is a good thing. Obviously, it's important to make sure you seek counsel, work with your advisor, again, to make sure it fits in your overall strategy. But the reason why I say that is because it's been shown to boost total returns. What are total returns? It's the price return plus the dividends over time. So it's important as you kind of see these things evolve, that dividends being paid can also be income to you from a portfolio, and it matters as well as the overall investment itself. Now, some things to look for when it comes to the best dividends that are out there. The main advantage, I think, of adding dividend stocks to your portfolio, again, is that they are to accelerate, again, your total return. And let me give you a quick example of that to clarify this. Let's say that a company pays out a $3 per share dividend, and the stock price currently is $100. Now, hypothetically, that means its dividend yield is what? 3%. But if the company raises the dividend by 20% over the next 3-year period, very common, the investor is now making not $3, but $3.60. Now, the yield, obviously, for that investor is 3.6, which can help increase, again, the total return. So let's say, for example, the total return, which again is the increase in value plus the dividend. Let's say the hypothetical stock I'm bringing up here, you bought increased by 10%. If you include the dividend yield, the total return for you is 13.6, right? 10% plus your 3.6. So you understand that adding dividends has a lot to do with the overall return or total return, which is really what we care about in a portfolio. It also adds a good mix of diversification as you put investments in value companies, which are typically dividend paying companies, along with growth companies, smaller capitalized companies, right, in the equity market. You can also put this into with fixed income and bonds. So these are a really great way to create your asset allocation and your overall balanced model that you're trying to look for. Hey, I hope you enjoyed that today. If you did, make sure to subscribe to our channel. And until next week, always remember to make your money matter.